Welcome to the Thematic Edge. I'm Marvin Barth of Thematic Markets and Seriously Marvin. Today, I and my co-pilot, Mark Farrington of the Global Watchtower, are pleased to welcome Arthur Hayes, the crypto innovator who co-founded BitMEX, once the largest crypto derivative exchange, the first crypto unicorn, and the inventor of perpetual swaps. Arthur is now CIO of Maelstrom, his family office, where he also writes the excellent Crypto Trader Digest. We start with Arthur's background, how his early experience in Asia during Lehman Brothers' failure shaped his outlook and interest in crypto, and how he built BitMEX. We then explore his macro framework and how he integrates it into crypto trading. He describes to us what underlies crypto value, how he uses macro, including thematic markets research, to trade crypto's turning points. We discuss how crypto adoption affects Bitcoin's value, the surprising threat it represents to its long-run value, and differences with gold, and also whether Bitcoin is money or an asset. We then discuss the politics of crypto, why the Democrats turned against it after the failure of FTX, and why Donald Trump embraced crypto. Finally, we look at how geopolitics not only affect Bitcoin's value, but your perspective on it depending on your passport. This was truly a fascinating discussion that both Mark and I really enjoyed. But I do have to issue one word of warning. The expletives fly as freely as the insights in this episode, so you may want to cover the kids' ears. And remember, as always, nothing we discuss on the Thematic Edge constitutes investment advice. Our conversation is purely for informational and entertainment purposes. Do your own research before investing, because only you are responsible for your investment decisions. With that, please enjoy our conversation with Arthur Hayes. Okay, Arthur Hayes, welcome to the Thematic Edge. We have my usual co-pilot here, Mark Farrington. Arthur, welcome.
Thanks for having me.
Hey, we're really excited to have you on here. We haven't really talked about the crypto space much here, other than Mark and I talked a bit about stablecoin developments and how that reflects on our views related to the dollar. So we're really interested to dig into this with you, but you have a much broader background than that I'd like to dig into, and I think would be useful for our audience to understand, where did you come from? How did you come to crypto, and founding what was the biggest derivatives trading firm in crypto?
Sure. So I was born in Buffalo, New York, a long time ago. Maybe not as long as you guys, but a long time for me. And I, went to high school there, and then basically my senior year, I read this book called Ugly Americans about Michael Lurch from Evolution in Tokyo.
Yeah.
I was like, that sounds fucking cool. I want to go to Asia. Like, fuck this New York stuff. Like, I need to get there. I live in Buffalo, New York, in the suburbs. It's boring as fuck. So like, I need to get out of here. So I read that book. I was like, okay, I need to get to Asia. And but I decided at the time that probably China was a better fit for the economic times of 2008 when I was 2004 when I graduated high school. And so, I decided I was going to take Chinese, go to, I went to Wharton Business School in Philadelphia, and, somehow make my way to China. So I was in Wharton Business School. I took Chinese as a language, every day an hour, you're writing characters every night and all this sort of stuff. And by my junior year, time to do study abroad. And unfortunately, I wasn't fluent enough to go to our full immersion program in Shanghai, but there was Hong Kong, and there's two programs. So I chose one at Hong Kong University of Science and Technology out in Sai Kung in Hong Kong. If you're familiar with Hong Kong, beautiful place, and I'd never been outside of like Bahamas and Canada and the United States. Got on a plane, 18 hours all the way to Hong Kong, and started my financial services career, really. So did my 6 months there in university, loved it. Somehow finagled a job at Deutsche Bank in Hong Kong my junior year summer as an intern, which was insane. You know, you said, Mark, you were in Asia for a bit, like Hong Kong, summer of 2007, bull market,
Yeah.
HSI 30,000. It was insane. It was so much fun as an intern. We were just hungover every day at work, but it was fun and you learned a lot and the people were really cool. And, I got my offer to come back and, you arrive in the summer and Bear Stearns, it went under in, I think, February, whatever. People
Yeah.
were freaking out. Like I had some friends who had bear offers. Like, oh, what the fuck am I going to do? Well, some of them got JP Morgan transferred or whatever. Summer comes around and, I guess, this podcast has a lot of people in finance. You might remember, like, you get your job and then you have that like 10 weeks of training, right?
Yeah.
And you know that like there's a test at the end of training and you don't fuck up the test because then you either don't have a job or some people were getting put back to like commercial banking, like the shitty part of the bank that doesn't make any money.
Equities in Dallas for
Yeah.
old timers like us.
And so we were freaking out. Oh, fuck, we got to study. We can't just get drunk every day and come into training. So, everything was fine. I make my first day on the desk. I was on the index vol trading desk as a graduate. It was the Monday morning after Lehman had went bankrupt. And so you get on the floor and you see all these guys you've been partying with the summer before. They're talking about the big bonuses and they're going to buy this fancy car and whatever. And like people are just shit scared. Head of trading is coming out saying, can't trade with this bank, can't trade with that bank.
Yeah.
And all the grads just sitting there and it's just like, what the actual fuck that we just signed up for? Our forward curve of like, we're going to get, make $100 million in 5 years just went down to zero. After this, like, are we going to have a job in 2 months time? And sort of that was my um, baptism by fire into banking. And the interesting thing that you learn, because I was at a European bank, is the difference between who took a bailout, who didn't, right? So you go to Wharton Business School and they talk about, financial responsibility and it's all about profit and fuck the government and non-intervention and all this sort of nonsense, right? And then you get on the floor and the American banks that took bailouts, people got paid. The European banks that lied about their balance sheets, Deutsche Bank, and didn't take a bailout, nobody got paid. And so you're like, huh, what is this? I thought like if you didn't have a government as your equity holder, you would be better off than having the government as your equity holder. So that was the first real life example of being challenged on like how financial markets actually work and the role of liquidity in the central bank and all that sort of stuff. And that carried through in sort of my, traditional finance career. I did 5 years in finance, 3 years at Deutsche Bank, and 2 years at Citi doing ETF market making in Hong Kong. And, this distrust of central banks and the whole financial system that I was a part of, started on that day in 2008, manifested itself with getting into gold and that whole song and dance, lost a lot of money because I didn't really, really understand how things work. I had sort of this like, oh, the Fed's going to like hyperinflate the system and we're all going to be trading shekels. So I better have some gold. And it worked until it didn't. And so I learned a really good lesson about position sizing and all that. And
Oh yeah,
the best thing
that's
that
an
ever,
important lesson.
yeah. And the best thing that ever happened to me in April of 2013, I got fired from Citibank and like just a standard riff. And I was like, oh, what am I going to do with my life? This baking thing, not really making that much money relative to what you thought you were going to make. Can I do something else? And I heard about this crypto thing or Bitcoin. I said, let me go read the white paper. So I read the white paper and it really resonated with me philosophically. And I was just like, okay, well, how do you trade Bitcoin? So I started doing research and like looking at every single trading platform across the world in 2013, which weren't very many. And I started trading derivatives and doing arbitrage between different exchanges in Hong Kong and China and around the world. And eventually got to this point like I want to start my own derivatives exchange because that's my background and I think that I can make a better platform than what was out there at the time. So I don't know shit about coding or anything about technology. I went up through my network in Hong Kong, found my other two co-founders, pitched them on this idea of let's build a Bitcoin only derivatives platform. I'm like, okay, cool, whatever. That sounds like a good idea. And so like we started in 2014, built a platform in a year, launched it in 2015, very hard going, there's a long period of time where we had no business. And then, we've slowly dawned on us, okay, we need to do very, very high leverage. We, help pioneer this socialized loss system in a way that protects the exchange when you're offering high leverage. And then in 2016, we invented the perpetual swap, which has now become the most traded product in crypto history. Hyperliquid, Binance, they all basically took the thing that we created and, took it to new levels. Congrats to them. And sort of that was my, story. BitMEX was the largest exchange in the world by trading volume. And, from 2019 to early 2020. And, then afterwards I started doing the family office thing and chilling. And the macro and pontificating on Twitter and my essays and newsletters.
Well, that's a good pivot over to that because you do have a very strong macro interest. So I hope you won't mind my pumping my own
Of
business
course,
here
I am on your
by
show.
highlighting that you are a subscriber to mine. That is actually
Yes.
one of the ways we know each other. And the other way we know each other is that you invest with a mutual friend of Mark and I mean, someone Mark actually has known for 30 plus years, David Dredge down in Singapore. And so you are very connected and very interested in macro. How do you use resources like, thematic markets, or how do you see someone like David Dredge, who is very much a very clear macro thinker out there? How does that fit into your framework and how you manage your family office?
So, like a lot of folks during COVID, I mean, I'm stuck in the house in Singapore. They have pretty brutal lockdowns, not much going on. Like, fuck it, let me sling some stonks. So, got my PWM account. I got my fucking ISDA. I felt like a badass. And then I just started getting absolutely crushed by the bid offer spread and all these like esoteric financial derivatives that I thought I knew how
Yes.
to fucking trade. And I was like, okay, stop. It's just not working. And, to his credit, my RM said, oh, you should meet this guy, David. He runs this volatility tail risk fund. And I was like, okay, let me go meet this guy, David. So, we sat down for coffee or tea in Singapore, and he, gave me the whole spiel about, what he was doing with this fund and, the tail risk. I'm like, okay, this is great because what David provides is the ability to trade these esoteric financial derivatives and get prices that I'll never get,
Yes.
collateral terms that I'll never get. And he has my tail hedge because at the end of the day, if people stop printing money and you get austerity and all these things that I think will never happen, he's going to return like 10x on my money, right? And so
Yeah.
that allows me to just go balls to the wall with crypto, stonks, gold, whatever the fuck that I want to buy, because I know that if they ever do turn off the free money spigot, there's David over here, and when the global system collapses, he's going to make a bunch of money, right? And so
Yes.
like that's conceptually how I view Dredge. And every time we meet for coffee in Singapore, I basically ask him like, okay, what are the banks selling you? Because whatever they're selling him is where the risk is. They
Yes.
sell to him at so stupidly low prices, these convex structures. Okay, well, that's where things are going to blow up. So it's very interesting talking to him and understanding like what he's buying, because that's where that's what people are mispricing.
Yeah, I do find it really interesting because in many ways, and Mark can probably speak to this better than I can, you know, Dave is also in many ways the ultimate sort of anti-fiat money kind of guy, and yet
Yeah.
he's in the fiat system, right? Like he's never been a crypto person. He's never gone down that road. And part of that is just because, as you rightly identify, he really is the expert in how to hedge those risks within the system. And so it's quite interesting that there does seem to be a real alignment of interests and sort of philosophies between you and he. You've just taken very different paths, and yet you seem to think there is value in differentiating in his space as well.
Yeah, absolutely. Because I think at the end of the day, like my whole portfolio is based on the assumption that if anything goes wrong, they print money. And you can identify which asset does the best when they start printing the money. Obviously, I think it's Bitcoin and crypto, and have done very well in that. But you could think it's AI. You could think it's certain types of credit, whatever it is, where we're all in the same trade, even though we kind of like disparage each other about, oh, why are you trading that piece of dog shit or this or that, right? But at the end of the day, every financial service professional, we're all the same trade, which is they will print money, they will save us. And so, what are we going to exchange this unit of fiat that will be infinitely debased in terms of whether it's a stock, it's real estate, it's a car, it's a watch, it's gold, it's Bitcoin, it's all the same thing. Which one goes up the fastest, right?
Yeah.
But should they ever decide that they want to do austerity, which sometimes they do for about a few months, then everything goes down pretty quickly. And so then you need to have the other side of the equation, that is Dredge, which is basically saying, okay, well, I can basically buy these tail risk hedges from banks that will never be allowed to go out of business. So if I'm up infinite money, they'll just do the AIG and they'll print the government money, hand it to AIG, and they hand it to Goldman, who handed it to their clients. Like, so that's David.
That's awesome. Can I jump in here for a second, Marvin?
Yeah.
First, it was fantastic to hear you tell the pre-GFC story of your life there, Arthur, because Marvin and I are always waiting one day to do a podcast where we go back and tell our war stories from that perspective. And yours is the first I've heard from the intern perspective, which I
Yeah.
really love. Most of us were like talking about how we watched our sand castles get melted by the rising tide. So it's good to hear your version. But
Or I was over in the policy world at that time, if you recall.
true.
So yeah, we've got all three perspectives here. Sorry, go ahead, Mark.
Yeah, no, that's right. One day we'll do that podcast. But I really liked how you framed it. We're all chasing same our own preferred risk assets, but we know at the end of the day, the story is, when the market blows up, the government's going to rescue us and print money. That actually helps a lot for, I think, traditional finance people who look at crypto, and we see the digital asset space just rebuilding literally everything that we already have in the traditional space. Even like the hard money, Bitcoin argument. I mean, you built the perpetual swap. Basically, you helped create the synthetic and the paper market that sits on top of this limited, scarce resource asset. So, and then the exchanges and the ETFs. I mean, just step by step, the digital asset space is building all of the same leverage and paper asset on top of digital assets that they did with fiat assets and even gold. So, do you think that most of the participants in the crypto space now understand that crypto is a risk asset, highly dependent on liquidity? We're trading liquidity. We're not, dealing with some scarce, immutable asset.
Well, I mean, it is scarce and immutable. At the end of the day, when FTX and BlockFi and Voyager and all these firms failed in 2022, there was no bailout. You can't print Bitcoin. You can't print any of these cryptos, and so it's similar in many respects, but different in that key respect. There is no bailouts, and mathematically, cryptographically, cannot be bailouts. And so, yes, we sort of rehypothecate risk and add leverage and all that sort of stuff, but there's a limit to how high you can do it because at the end of the day, we know that when something goes bad, you actually go bankrupt in crypto. Like you lose your company or your stack or whatever, right? There is no bailout for Bitcoin. And I think people over time have really latched onto it's all about liquidity. The amount of people that can probably name a Fed governor or who runs the ECB or the BOJ from people who you wouldn't think know how to do 2 + 2 = 4 based on the way they look and the way they talk, you know, goes to like, I think people in crypto uniquely understand what it is that we're trading and the different people in the world that pull the levers that have made our assets go up in value.
But do you think that changes as the digital assets get institutionalized? I mean, once we tokenize all of the traditional assets, the bailouts are still going to be there.
Yeah, so they'll bail out the BlackRock tokenized fund, but like they can't print Bitcoin. If BlackRock gets hacked and say, however many Bitcoin they have is absconded away to North Korea, it's not as if the Fed can go, okay, Kim Jong-un, can you get back to Bitcoin? And otherwise we're going to print some more. Like you can't do that. So I think that's the key thing that's different in crypto, even though you see the same sorts of players creating the same sorts of products.
Okay, cool. Thanks.
Interesting. So I'd like to ask you how you think about your macro framework for Bitcoin. Like, where do you think value comes from in Bitcoin? What are the things that drive it in your view?
So I split up into two things. I call it technology plus liquidity. So the
Hmm.
technology is Byzantine fault tolerant system, this immutable blockchain, UTXO sort of system that we have in Bitcoin, and it either works or it doesn't. And it's worked for, 15 years. And I think obviously there was value in that technology before the liquidity argument came in. That's why it was non-zero as early as 2010 after the Genesis block in 2009. But because it's the OG and it's super conservative, not much changes. You can't really do much with Bitcoin. It's a very limited scripting system by
Yeah.
design. It's supposed to be very secure and safe in this rough and tumble world of, magic money on the internet. And so it doesn't do a whole lot, which is the point. So the technology argument really isn't something to hang your hat on in 2026 as a value proposition for why Bitcoin should go up in price. It all comes down to liquidity. So will there be more units of fiat in the future, and what's the pace of that addition or subtraction, acceleration or deceleration? And that is literally my whole entire investing framework. And that's all I care about is, what's going on at the banking level, what are they lending to, central banks, monetary policy. And then at a macro level, it's like, okay, I need to get the turn right. So there's going to be the 2020s, the 2023 sort of, banking crisis, the bills over bonds, and, reverse repo, that trade in September 2023. Like, you got to get these inflection points right. And if you do that, everything else is gravy. It doesn't really matter. Like, I'm not trading the 1 minute candle on Bitcoin. So like, I don't really care what happens in the very short term. It's like, where is the stress? Okay, there's going to be some sort of sell off because everything's correlated when things go down, correlation one, all that sort of jazz. But then I know they're going to print the money. How are they going to print the money? Where is it going to go? Okay, make sure I'm positioned for that. All I care about is the turn. I don't care about anything else. And so that's what I spend my entire day thinking about when I'm thinking about this sort of stuff. Is like, where's the next crisis? How do I make sure I'm liquid for that? So I'm adding risk at the turn.
Mm.
And so those turning points are macro turning points, which goes back to the point of why you are so interested in macro, is because it actually is what you see as the critical driver for at least your trading performance in Bitcoin or other cryptocurrencies.
Yeah, they're the best points to add a convex risk at a cheap price. And so I
Okay.
want to be ready for that.
And do you see Bitcoin as digital gold, or how do you see it compared to something like gold? And will it supplant gold at some point, or is it always going to be a parallel asset?
I think it's a parallel asset. I think it's a bit different, right? Because gold has weight, Bitcoin is weightless. I can store my entire Bitcoin wealth in my head. I can't do that with gold. It can't be confiscated in the same way as the government can confiscate gold because they can see it. It's heavy, it's hard to store $1 billion of gold. People are gonna find out where it is, but I can store $1 billion of Bitcoin in my head. So there's that difference. But on Bitcoin's perspective, Bitcoin has to move to have value. So if all Bitcoin were held by people and we never exchange it for anything or it just stayed dormant, miners have no revenue and it goes to zero. Whereas gold, doesn't have to move. I can just have my gold sit there, whether it's in 1 year or 10,000 years from now. It's still molecularly gold, and hopefully it has value. So I think they're similar but fundamentally different in some respects. I own a lot of gold, physical and miners. I own gold because central banks will buy gold. They will not buy Bitcoin. I don't know. I know people like to talk about Bitcoin reserves, and I'm like, that's nonsense. Number one, central bankers, they're people too. They're afraid about losing their jobs. They get paid very well for doing not a whole lot. Why would you buy? Why would you buy Bitcoin? For 10,000 years, people have buying gold as a sovereign. Why would you change now? Like, okay, cool, you got it right. Maybe you got Bitcoin from 60 to 125, but from 125 to 60, you lose your job. And so
Yeah.
I think it doesn't make there's no reward for a central banker to go and save in Bitcoin, but they will save in gold, and they have done so, and we're seeing that happen. So that's why I own gold. You should own both.
Okay. And so one thing that seemed to be missing from that is the adoption process. So, you see a lot of people out there who focus in the Bitcoin world on power laws, which really, to my mind, are basically the adoption process of Bitcoin. As you know, I've modeled
Yes, I
Bitcoin
saw
that
that.
way, which in the background is a fundamental sort of valuation model on exactly the macro factors that you might talk about in terms of what's driving liquidity out there, what's happening with fiat relative to limited supply assets like gold or Bitcoin, but I built in an adoption process that I think some crypto people have been offended because it's a pandemic model. But like, look, that's how you would model an exponential growth in a population. That's just what it is. Um, you don't seem to talk about adoption. Does adoption come to play in your framework? How do you think about adoption and where we get to in terms of what does full adoption look like?
I don't think most people want financial freedom. They want to be told what to do. They want someone to hold their money. And they're okay with, you know, some overlord controlling things, if you want to call it that. And so Bitcoin is fundamentally different. If you own and custody your own Bitcoin, there's a lot of things you have to do that are not fun. 24 character seed phrases, this or that hardware wallet, technological upgrades. Where did you store your keys? Did you forget your password? On and on and on and on and on, right? And so I don't think that's very scalable in terms of the population of people actually care about that sort of stuff. If anything, they just want to own the ETF,
Yeah.
which isn't real Bitcoin. And so I think I don't care about adoption because most people don't want the things that make Bitcoin valuable. They do not want to be their own financial institution. They're perfectly happy handing over their entire financial life to somebody else to plan for them because even if it goes wrong, they don't have to blame themselves for it. They can blame,
Yeah.
oh, it was my financial advisor, right? Which is a cop out in my respect, right? You care about beating inflation, you care about wanting to afford these things, yet you're unwilling to put in the effort to understand this, the financial ecosystem and what's happening, and you'll just give it to the guy at Morgan Stanley and then bitch about him why he underperforms the Nasdaq. Well, then do it yourself. But you won't want, you're not going to do it. And so that's why I don't model adoption because adoption doesn't matter. I think for there's going to be a small subset of people who want Bitcoin. There's only 21 million Bitcoin. And so liquidity is going to be there whether or not there's adoption, which will drive its price. And so it's almost irrelevant to me. Maybe we're at near full adoption in terms of the amount of people that care about owning Bitcoin because it's hard to do correctly.
Okay. Yeah. So,
Can I just jump in on
yeah,
that for a
please,
second, Marvin?
please.
Yeah, that's I really liked how you described that because rather than adoption, I was also thinking this in terms of evolution of stages, where you really do have to make it easier and reduce all of this burden on the individual to be their own financial institution, as you suggested, Arthur. But I mean, is that not in fact coming? I may sound like a crypto skeptic, but I'm not. I mean, I own plenty of myself and traded like everyone else during lockdown when there was nothing else to do. So don't take my tone the wrong way, because to understand it, I keep cross-checking it against the evolution of how traditional finance also evolved, and in particularly gold, which kind of sits somewhere in between. So, gold is also a pain in the ass to store, and people don't want to keep it at home. And historically, the reason you don't keep all your wealth at home is because the robbers just come to your house then and kill you and extort you out of your money. To extort gold is not much different than to put a gun to your head and get your crypto keys so you can steal your Bitcoin. So you know, inviting that custody risk into your home is something that people learned over time as well. Like, I don't really want to do that. I want to have my wealth in a safe custody, and if anyone tries to steal it, I want somebody else's security guards to fight them off, not my own. So I'm just wondering, like, rather than adoption in terms of popularity, which I think popularity and utility, which is in Marvin's model, um, what about the institutional steps that can be taken that make it much easier to trade, use, own, and and even spend Bitcoin, are they ever going to, create a higher velocity of money use of Bitcoin in the way that they did in traditional finance and even in gold? It is these synthetic markets and these paper markets on top of these inconvenient parallel assets that drive the demand for them.
Well, the problem with that is that if you take Bitcoin to the extreme, once the subsidies end, if it doesn't actually move on the blockchain, there's no reason why miners upkeep the system and it goes to zero. So with BlackRock and Vanguard and Fidelity and pick your asset manager all own all the Bitcoin and everyone just flings around these paper derivatives between each other, the price goes to zero, which I think is quite elegant in a way. Like either you use it and it has value because the community uses this form of money to do something, whatever that is. But if it's just held by rentiers and they just trade paper against amongst each other, it's worthless. If you take, because there's no transaction fees paid, the network is not used. So I think that is the key differentiator between why there will be a hard limit to how much will be acquired by some of these institutions, because theoretically, if you think about it to be its end state, if just BlackRock owns all the Bitcoin, then it's zero. And then all of a sudden that product that was making all this money is now worthless. So if Bitcoin doesn't actually live up to the philosophy of Satoshi of an alternate financial system that's used by people outside of the government and the banking system, then it has no value. And so you've basically had institutional adoption of a zero, which I think is philosophically elegant and will be a check on too much, non-physical usage of these cryptocurrencies.
Do you think that's what's driven the sovereign's decision so far to only build Bitcoin reserves through, law enforcement acquisition rather than, openly buying it as a strategic reserve?
Well, I mean, most sovereign governments would have to print money to buy Bitcoin. They're not, no one's running surpluses in any major Western country or even the big emerging ones. So you're literally going to go to your population, who most of them don't own Bitcoin. They have a skeptical view of it. You're going to say, I'm going to print some money and I'm going to make all these crypto bros rich buying this thing that you don't like anyways. Please vote for me again in the next election. Like, that's just dumb. Like, I don't see why you would ever do that as a politician. And they won't. In the US, they talked about the strategic Bitcoin reserve. It's 2 years in. Haven't seen any strategic Bitcoin reserve. I don't think we'll ever see one because it makes no political sense.
But it's all law enforcement seizures. I mean, I think that's
Which
the
is fine, but that's not. You're
yeah.
not saying I could print money and build a school, or I could print money and buy Bitcoin, and so, or I could print money and bomb a country, right? People like bombing countries and building schools. They don't want to hand the bros in Miami the funds to go to the strip club. So, like, it's just not good politics.
I hear you. Okay.
So I'm intrigued, and there's two different directions it could go here. One is I actually am really interested in your thoughts on why the Trump administration adopted crypto. Was it purely a political move? Is there something else going on there? But then you said something very interesting here, and which is this point that if transactions stop, Bitcoin dies. And there's two issues about that I have that may just be my naivete, but one is I thought that the whole point was that once you do get to the final halving in whatever it is, 2040, and you no longer have a reward for it in terms of new Bitcoins being created, you have for mining, the miners will just develop fees. So you should still have some sort of system back there. And that's related to, what I see as the critical value creation event for cryptocurrencies in general is actually the adoption of payment rails, um, uh, uh, crypto payment rails by the United States, because now all of a sudden the United States sees independent payment rails like Bitcoin, Ethereum, Solana, whichever, as a valuable asset in its strategic rivalry with China. And so isn't there an incentive for the sovereign to now make sure that people are continuing to transact on that train? So,
So
please take whichever of those questions you like most and run with it.
yeah, so at the fundamental level, there are every time you send Bitcoin, you most times will add a fee. So there's already a fee market, and you can
Yes.
track the percentage of fees in a block that a miner earns. So the miner earns more in subsidies and fees depending on the time period, but there is a fee market already. So you already are paying a fee every time you send Bitcoin. Maybe you just don't realize it. It's very small, but again, the more it moves, the more the network is used. The more fees that miners make, and they're less dependent on the subsidy. So in 2140 or whatever that date is, if Bitcoin is moved and used for something, whether that's payments, store of wealth, what have you, the miners will still make money, and they have a reason to keep their computers on and keep burning electricity to upkeep the network. That is the theory, and that's why we have to have use cases for Bitcoin. Now, obviously, there's a big split in the community. Should Bitcoin be a hyper fast settlement system for small value payments? Like running Tether on Bitcoin, which it used to, but it doesn't really anymore. Or should it be this like gold-like store of value where, yes, it's still used, but the velocity of Bitcoin is nowhere near as high as
Yeah.
in the payment solution? And it's a philosophical debate of how large a block should be, who is upkeeping these nodes. And we went through this in 2020, whatever the block site debate, whatever year that was, maybe 2019, whenever it was, or 2017. And yes, it's still ongoing. What is Bitcoin? We still don't have an answer. There's still two camps on this, and we'll see what happens, right? At the end of the day, but even today, it's used. People use it. I use it for things where you pay people for in Bitcoin when you can't use any other means. Like there is people using it, but again, if we all just move to ETFs, then that argument sort of breaks down. So, I think we're already on that path, and there already is this debate in the Bitcoin community about like, what is Bitcoin? What it should it be used for? Is it electronic cash, or is it a store of wealth? And you can get philosophical on both ends of the spectrum. And then, to answer this sort of political question, because I know a lot of people care too much about all these acts going on in the US, like why does Trump like Bitcoin? So I think it's both he's experienced banks deplatforming his family after 2020, and it's political opportunism. So if we go back to by the Biden presidency, everyone thinks that the Democrats were anti-crypto. And yes, that's true, but it only is true post-FTX. Pre-FTX, Gary Gensler, the US government, were they open arms saying, please launch every Bitcoin project in the United States? No. But were they as antagonistic, launching enforcement actions on everyone in the industry? No as well. And so the SBF basically stole a bunch of money, gave a lot of political campaign contributions, and was on the cusp of getting every single major license you could get in the United States from the SEC and the CFTC before it was revealed that he's a complete fraudster. And once that happened, you had all these politicians that were stumping for Sam, who took his stolen money, asked no questions. I don't think a lot of them gave it back either. And now they're like, there's photo ops of Sam and like SEC people, and Sam and CFTC chair people, and Sam and House of Financial Services Committee members. And they're all loving Sam. He's on stage with Bill Clinton and Tony Blair in the Bahamas, like doing all the things you got to do. And he's a fraud. And so all of a sudden they had this problem where they needed to distance themselves from Sam, but they were entirely complicit in his rise, giving him this political cover that he was part of the establishment, and therefore it was safe to give him your money. And so what did they do? They had to say, oh no, we hate crypto. It's really, really bad. And they took a 180 turn, and you can see the change in the rhetoric after it all came out in November of Sam stealing all this money. And that's why they went so hard on crypto, is because they were complicit in the FTX debacle. At least at a very philosophical level. And so you see Trump coming in, okay, well, there's a bunch of people with a lot of money, politically alienated, and I'm mounting this comeback campaign, a populist campaign about, sound money, don't spend so much on the government level, all these things that he talked about. Of course, crypto makes a lot of sense, and you get all these people who just craved political attention. Oh yes, somebody's finally listening to me. They're taking me seriously. They're taking my money. Here, Trump, do crypto, right? And he's like, of course, he's a politician. He knows exactly how this game works. He took all the money, made all the promises, did some things, and it's just like, releases nice tweets about the crypto market and all that, but he's a politician and he has to make trade-offs in terms of what he's going to spend his political capital on. Is it the Miami crypto bro that is reviled across the country, or is it the, military industrial complex and fighting some more wars, right? So like, again, it's all about trade-offs. Crypto people don't seem to understand that politics is all about trade-offs. And I think that's where the disappointment where people feel is they didn't understand the game of what Trump was playing. Trump is a political animal, and he saw, a great opportunity. And I think he kind of sort of maybe believes in it. At least his sons do. They've experienced the, negative effect of debanking and all those sort of things. So I think that is where Trump is, pseudo pro crypto.
Interesting.
Pseudo pro crypto, good term.
I think, I mean, look, that's a very, maybe I'm just not familiar enough with the space, but that is a really original and interesting answer to me. And just what you pointed out about FTX and Sam Bankman-Friedman. I mean, in a sense, you're right. This was just like this massive indictment of the entire system. And so the system had to attack it to say, well, no, the system wasn't wrong. It's this other thing. And that is really, really powerful. So let me go back to that philosophical question that you asked about, what is Bitcoin? Is it a, currency? Is it an asset? Is it whatever? And, for me, and correct me if you see differently, like the point is it doesn't have the transaction speed, and maybe we should actually get into a question about what are the sort of cryptocurrency winners out there in the future, and will Bitcoin always be the biggest and most traded one? But it doesn't have that, but layer two, you have faster transaction speeds on there, and across platforms, you have an increasing use of these payment rails for things like stablecoins that are growing incredibly rapidly, and I personally think is where things are going to go. But that makes those assets that define those payment rails, like Bitcoin, like Ethereum, effectively Gresham currencies, right? This idea of Gresham's law that for those people who out there who don't know it, this British economist a couple centuries ago, Gresham highlighted that good money, bad money will always drive out good money. That's the sort of phrase from it. But what he really meant is that people won't use their gold to go trade at the market because that's too valuable. They're going to keep that at home, and they're going to use silver because that's less valuable, but everybody will still accept it. And so that does create this two-tier system where people are still trading with dollars, but they're holding their Bitcoin as effectively digital gold at home. And the reason why I bring that up is I would sort of push back on what you said there, that if it all becomes ETFs, well, look, we still have plenty of gold trading out there. It doesn't trade anything near the $6 trillion a day in dollars that trade out there in foreign exchange markets. That's true. But it is still a very liquid asset in the background that people are still trading. Why wouldn't that be Bitcoin's future or Ethereum, whichever winner you see?
Gold's value comes from physical laws of the universe, right? Atoms and molecules and whatever else, right? Gold will always be gold, whether it sits in a vault or it's moved in a buggy cart or a car or a Brinks truck or an airplane or whatever it is, right? Like if all the gold just sat there today, it's still gold and it still has value. But again, if Bitcoin does not move and there's no subsidy, which again, it goes away in however many years, then there's no income for the miners. And if the miners have no income, They have no reason to run a node, to process transactions, to be available when you want to move your Bitcoin. And so that's the point. That's the fundamental difference between gold and Bitcoin. Bitcoin must move to have value. Gold has value intrinsic to how the universe is.
Yeah.
And I think that is the disconnect that people don't understand about the two. And they think, well, why wouldn't it just be like, the ETF market? And that's that is the difference. Like you just cannot have value if it doesn't move because it's purely a, electronic thing.
What if the governments step in and just run the nodes? It becomes like a utility. I mean, you could argue that for fiat currency, cyronage is basically the fee that the central banks receive in order to keep the node alive on fiat currency.
I guess it's what's the P&L difference, right? If the government says, "Oh, I'm going to run a bunch of nodes and I make money as a miner processing transaction on Bitcoin versus, printing infinite money and earning seniorage. I think they make more money printing infinite money and seniorage than they would ever make running a node on Bitcoin, which is why I never think a government will ever adopt a major government. Yeah, I guess El Salvador is, an outlier. That's not really the trend here. Like the United States, China, Japan, ECB, none of these people will ever adopt Bitcoin as, the legal tender where you pay your taxes. Right? This is not going to happen because why would you
Yeah.
do that? Why would you give up this amazing power that you have to create something out of nothing and charge a tax on it?
Yeah. Yeah, that explained how I approached the market from the beginning when I first began trading crypto. Because, as Marvin said, I traded currencies for most of my life, and I never traded currencies as if they were a currency. I traded them all as risk assets from the beginning, without all the systems analysis that is required now, because we never had to defend the dollar system in the 90s and things like that. That's become a new cottage industry for me to try to explain the system. But trading all currencies as risk assets, you very quickly understand there's a core and there's a periphery and there's a frontier in the currency space. And everybody in the periphery and the frontier, they view the world differently. And that's where Bitcoin becomes interesting. And that's where CBDC becomes interesting because they don't have all of these, natural benefits, and they won't make the same trade-off decision if they're part of the core part of the currency system. So BTC, like I can see it somewhere in the periphery, along with gold, having some utility, but not the same utility as the core, and having, government involvement enough to keep it updated and liquid. And all of the peripheral countries of a certain size who are faced with either dollarization or some other sort of digital currency intrusion into their monetary base, spreading their bets. They don't want over dollarization, and they don't want to, be dominated by BTC. So they end up, having multiple official currencies, and they try to extract as much network benefits out of each one they can.
Yeah, I mean that could happen for sure.
So, before we close off here, one of the things I did want to ask you about is how something like geopolitics fits into your framework. I mean, does it, or do you purely look at this as a monetary issue, and these turning points? Are those turning points influenced by geopolitics? How do you think about that? Because I think one of the things that people have been, or at least some Bitcoin aficionados have been disappointed in, is that when things like the Iran war, and same thing by the way with gold, right? Like these things did not perform for you. So how do you see cryptocurrencies, and in particular Bitcoin, relationship to geopolitics?
Well, I think it depends on the passport you have, right? So let's imagine you're a wealthy Russian person in March of 2022, you're partying it up in St. Moritz, and all of a sudden your car doesn't work anymore, and your money's been confiscated. Why? Because you just had this. You were born in the wrong place and have a wrong piece of paper.
Yeah.
That is when you understand Bitcoin. If that doesn't happen to you, you don't understand Bitcoin. Why would I understand Bitcoin? I swipe my card, I buy my things. The bank, my PWM manager is really nice to me. They, buy the bonds, da 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 da. But then one day you wake up and you have the wrong passport. or you get added to the sanctions list for whatever reason, or you have the wrong skin color and now you're a terrorist, right? And all of a sudden you are cut out of the banking system and there's nothing you can do about it because you fit into this mold and the state has decided that they do not want you to access these state services like banking, which is a state service. That is why you own Bitcoin. Now, what's that worth to you depends on who you are and your circumstances. That's the value of Bitcoin. And now, and geopolitics is very influential in that because you have the United States government, which essentially controls the majority of the world's banking system, deciding that hundreds of millions of people no longer should have access to their money anymore because they don't like the particular leader or the decisions that they've made about their country. Nothing to do with you. You were just going about your life, you know, ambivalent to these geopolitical things, and all of a sudden you no longer have access to your money. That's why you own Bitcoin. And you can never explain that to someone until they've experienced it. Just like you can't explain to, a human being about something until they've actually learned that knowledge through pain. And that is why Bitcoin has value in my respect. And that's why geopolitics matters, is because as you start turning people off, cutting them out of the banking system for whatever reason, whether you think it's right or wrong, they have to make other choices. And other people see what's happening to the Russians. Okay, well then why do I own a treasury? Maybe I don't need to own gold. Why do I own all these stocks or whatever? Why do I own treasuries when I can't feed my people because all the oil is stuck behind the strait that the US government started this war and they're the ones supposed to protect free shipping? How does that make any sense? So I think that's how geopolitics fits in my framework is it illustrates why we do what we do in crypto to millions of people at one time, because now they understand how powerful the state is and why we must have an antidote to this centralization of power, especially when it comes to money.
Absolutely.
Okay. Well, really, this has been a fascinating interview for me, Arthur. And before we close, any places that people should look for you? You have a Substack, the Crypto Trader Digest, very witty. One might say. You're also on X. What are your handles out there, and where should people look to follow you?
Yeah, so on X, I'm at Crypto Haze and Substack at Crypto Haze as well. And yeah, so that's where predominantly we publish all the essays on Substack. I shit post people on Twitter and X or whatever you want to call it. So that's where I am. Or you might see him on the tennis court or skiing somewhere.
Okay, well, fantastic. We'll look forward to skiing with you in Hokkaido someday. Um,
Exactly.
but Arthur, thank you very much for joining us today.
Thanks for
Yeah.
having me.